All right, so we're going to talk about support and resistance. This is one key essential to have into your trading. Whether you're a beginner, as you go on to trading for the next year, 2, 3, 4, 5, 10 years, this is something you're always going to have incorporated in your routine of analysis, is what we call it. In the routine that you take of when you look at the charts and you want to make decisions. This is going to be something that every trader, it is something that every single trader, no matter how long, 5, 10, 15, 20, 30, 40 years, has been trading for. Christopher Terry, for example, the CEO, he uses it. He definitely applies it, has it in there, knows of it. It's something that every single trader has. It doesn't matter how long they've been trading for. It's a key ingredient, is what I like to say. It's an ingredient inside your process to making decisions. And as we say, analyzing the charts, looking at the charts and analyzing them, because there's ways that we can approach the charts, and that's called technical analysis. That's when we use a variation of tools. And of course, when we analyze the market's behavior, the market's repetitive behavior, well, there's different methods that we can apply when we go about that repetitiveness. So this is one of the main ones, I'd say, as top 3, top 5, like I'm saying, support and resistance. So write this down. We're going to take some notes here for the first part. I'm sure most of you probably in the room know or have heard this term support and resistance before, or anybody who's watching this has probably heard this, but this first little 15-minute of the session is just for anybody who's got that first couple of weeks or maybe a month or two of experience in the market, or someone even who's brand new. So I want you guys that are brand new to think of none of this as random, because the market has what I call a memory. It's one thing one of my mentors told me, is he installed into me the idea of how the market has a memory to it, and it tends to repeat the same things over and over again by nature. It just happens. It's very repetitive, just like our human instinct, just like us as humans. We have a very repetitive nature to how we go about our weeks and our months. There's some sort of routine inside of there. Now, support is a zone. It's an area on the chart. Think of it as an area on the chart that price comes to consecutively. So support, we're going to think of support like our floor. Support is like the floor, and support is the price level at which demand is thought to be strong enough to prevent the price from going any further down. So what the logic dictates, that as price declines towards support, it gets cheaper. Note that. We're going to talk about that idea in a bit. It gets cheaper. And the reason it being cheaper, or it getting cheaper, is a reason why buyers become more inclined than sellers. So support is an area that buyers will come into the market. They will outnumber, or you could say outnumber by money, the amount of sellers in the market. So it looks something like this. Let's just pretend this little illustration I drew here, this line going up, the market comes back from where it took off here. This is where the market took off, and it came back to that same area. So the market does that. It'll come back to the same price levels consecutively over a period of time. It could be in the short term or the long term, but this is just an example of what we're looking at, is the market starting at one point, taking off, and the reason the market goes up is because there's buyers in the market, right? If the market went up here, it's because buyers were in the market. And then the market came back to where those buyers originally first bought the first time, another time. And the market had the same reaction, and so on. That's the concept of support and resistance. It has a bounce effect. So price is bouncing off of this level. I like to say it's playing off of it. It plays off of this level. So let's go forward. Just as an example, this is a chart right here, guys. Here's an example looking at a chart. As you can see at the bottom of the chart, there's dates. That date's marked December. That was December of 2015. Then we have 2016, almost close to 2017 here. So you can see we're looking at a period of time here, right? We're looking at a scale here through time. So as you can see, over time, this level played a significant role for buyers in the market. This area on the chart, since this point, the market went up. And then it naturally came back to that level. Or when it came back to that level, what happened? right? When it came back to that level, the same buyers who bought here are buying here. Because again, remember, markets have memory. So what happens when the market hits here? It takes off and it goes up. It goes that way, only to come back yet again. And the same reaction once occurs as it did the first time, the second time, for a third time, we have buyers entering the market here, only for it to go up. And then, of course, I think you guys get the idea now. You can see it's consecutive. It's happening over time. Okay? The opposite but same, so the same difference, is called resistance. This is our ceiling. So think of support like your floor, like your ground, and resistance is like the ceiling. It's the roof there. It's where sellers, instead of buyers, now we're looking at an area where logic dictates that sellers are coming into the market on resistance zones. So it's the same thing we just looked at, just the opposite. So being able to identify these levels, being able to identify key support and resistance level is, again, like I said, an essential to successful technical analysis, because it's something you're always going to have. It's always going to be there. It's not going to be easy sometimes to establish exactly where these levels are, but just being aware of their location is key. Being aware of them is key. It's going to help you forecast. There's a word I like to use. Some of you have probably heard me say the word forecast before, who have ever been on my sessions. This is one thing that's going to enhance your analysis and your forecasting abilities. Forecasting is when we make predictions of where the market could go. I'll get a little bit more into that, but resistance zone, again, price goes down. What do we have? We have, again, a familiar level that prices will come to, or it's been to. So I'm going to go over the charts with you guys in a bit. I'm going to break down, steps to take when first looking for this and applying it to the charts, to, again, what we call technical analysis. Remember, like I said, it's a key ingredient in trading. So here, take some notes of this too, guys. So here's just an example of a resistance zone. I showed you guys an example of the floor already. So again, the floor. Now I'm showing you the ceiling. Resistance zone. Same opposite as the floor. So this is another chart. Again, pay attention to the dates down at the bottom. Look at the dates down at the bottom. You can see a little cutoff of 2015 right there. We're looking at over a year here, because you go 2015, 2016, and again, close to 2017 over here. We're looking at a long period of time on this chart. And you can see one thing that was very relevant around this area was the reaction price was having. It tended to keep going here and coming down, and then go back and come down, and come significantly close again here and go down. Right? Every time price came up to this level, it went down. Why? Because people are selling the market here. They're selling the market here. Every time it comes down, it goes down. Then you can even see more over to the right-hand side here. You can see how the market even came like very, very close to that area. Very, very close, and they're very consecutively few times in here. If once there, right, it fell into where it fell over here. Right, just look at kind of this whole area that I'm circling right now. So take note of this right here. For me, I've been doing this for few years now. So I find the best, most reliable support and resistance levels, they come off of time frames like the weekly time frame, the daily time frame, and the 4-hour time frame. I find the best, most accurate ones, those are the time frames that provide stronger accuracy with a core concept like this. So on this chart, we're looking at a weekly time frame. You guys can see where it says W there, because we're looking at a 1-week time. That indicates that each one of these green and red bars, each green and red bar, which is called a candlestick, each one of those green and red bars represent 1 week of price movement. Whether it was green going up or red going down, each one of these bars is exactly 1 week of the market moving. So it's a higher time frame. And remember that. Remember what I just said here. I hope you guys take note of that. I'll leave that there for like 30 more seconds, and then we'll continue. So again, This is just the basics to this, guys. Tomorrow night, I'm probably going to just do like a further ongoing of this session. So this is what I meant by forecasting. This is why it's going to help you with the ability to enhance your forecasting skills. Because remember, trading is self-sufficient. Trading is a self-sufficient skill set. So having the ability to repeat things and do things constantly is what enhances those skills. So this is the easiest way to start approaching that. Here's an example of an image that I took a before screenshot on. This was back in January. This wasn't now. This was at the beginning of the year in January. It was exactly January 15th was the day I screenshotted this. Now, I was looking at this chart when the market was here, right? I predicted that it was going to go here. And I was looking to see if it would have the same reaction that occurred here, here, and here. As you can see, this little rectangular zone that I drew out, that represents my resistance zone. Well, why is that a resistance? Because again, look, price went up, it went down. We would have established the idea that there's resistance there once price was here. Like once it got to here the third time. It would have been hard to say this time, but you can see how price went down the second time, then it came back up and went down. At that point, it's easy to say, okay, we have a resistance established here. Let's see if price can go here. Support and resistance, what I'm teaching you guys today is what it is, but it's not only just used to understand what price could do when it gets here. It's also used as a final destination. And it's used as kind of like a directional roadmap. We can use support and resistance to understand where price could go. That could be our opportunity, right? It was easy to say this. I predicted price was going to come up here. And when it came here, I was going to say, let's see if it goes down. It sure enough did that. That happened, but one step further from understanding support and resistance is also understanding that movement is a possibility. It going up there was the first thing that needed to happen in order to predict that. Does that make sense, guys? So support and resistance is not just used to understand, okay, I'll draw it out right now for you guys here. So the GBP AUD fell, very nice. Is the market moving? Let me just check something here. Give me a brief minute, guys. Okay, there we go. So support and resistance doesn't necessarily just have to be used to understand this concept about the market going up, going down, going up, and then being here and then it looking like it's going up. We don't just have to use it and say, okay, if price comes here, let's see if it goes down. Being able to even be a part of a move, being able to be the trader that says, okay, I'm going to look to buy it on the way up there and then sell when it gets there. That's also the concept. That's also something we could kind of look a little bit further on in expanding support and resistance. Is not just waiting for the market when it goes down here, goes up, goes down, goes up, goes down. Not just waiting for it to get here again, but even trading it on the way that it's going there. And then seeing if it has that reaction. That's what I mean by a final destination in price. Kind of like an example I did here, and this is something I screenshotted. This is what it looked like before, and then this was the after effect. That's how we could take it a step further. I won't get too much into that right now. But what I'll do is I'll go up into the TradingView chart now with you guys here. This is tradingview.com. So for those that are new, if this is your first time on a lesson learning about the market, this platform that I'm on right now at the moment is called tradingview.com. It's a free platform. You don't have to pay for it. There are things you can purchase on here. You can purchase things on here, but you don't need to do that. You can just use the free version. That's pretty much what I'm on right now. I pay for it. I pay monthly for some things on here, but as a new trader, you don't need to do that. It wasn't until like 2 years into trading until I started to pay for the stuff on here. So you don't need to do that. Just use this. This is like the free version. That's what I used for about 2-3 years. Until I got better at trading, I was like, okay, find ways to enhance it. Now, we'll do a little step-by-step of mapping out support and resistance just for anybody who's brand new. And even for some of you guys who have been trading for a bit. This is one routine that I take. So it's always good to adapt a routine in your trading. It's always good to have a routine. You can't just go into the market every week unrecognized as to what there is, as to the locations of things. Like I said, like support and resistance, it's a key essential of being aware as to where these levels are, as where price is, because price tends to find support and resistance, right? Because those can be recognized as high and low areas on the chart, areas where price has been bought and sold consecutively. Whether it's the shorter term or the longer term, we can recognize this price behavior. So we'll talk about routine. Here's one way to adapt a routine into your trading is with support and resistance. Now, it's good to do this. I do this on weekends. You can do it throughout the week, but a really good time to do this is on weekends when the market's closed. I like to spend Saturdays, Sundays, depending on if I go out on a Friday, I'll usually do it a Saturday. If I go out on a Saturday, I'll do a Sunday. I figure out a day where I do it, where I spend about 2 or 3 hours, right, mapping these locations out, looking at a few currency pairs and just seeing where the price is and where it could go possibly. And this is one way to start it off. As you start to develop routines like this, it's going to only enhance what you see on the charts. It's only going to enhance everything. So again, if you're looking at these charts for the first time, these are candlesticks. Originally, a chart looked like this. This is originally what a chart would look like. Over the years, they developed candlesticks. Candlesticks, those represent time, like I said. So we can alternately choose that time. As you can see, there's a time interval section right here. These are called my time frames in the top left corner. These are my time frames. So if I click on this arrow, all time frames are going to be active for me to select. So right now I have selected 1 month. That indicates that each one of these green and red bars, AKA, I'll leave the name up, candlesticks. I always do that. Candlesticks represent 1 month. Now, when I do this routine, I'm going to start on the 1 month time frame. See what I always do? When I do this routine, I'm going to start on the 1 month time frame. I'll make the font a little smaller so it fits. There we go. And then I'm going to work my way down from the 1 month to the 1 week to the 1 day and maybe the hour time frames. But to find my key levels, my key support resistance levels, I'm going to start with these first 3 time frames. And I'm going to start at the 1 month. Because the 1 months are going to allow me, the reason I'm going to use the 1 month to start is because it's going to allow me to see back into time. So it's going to allow me to see the zones, the areas on the chart where this method has applied or where this has been happening over time, right? So it's going to show me the areas where price has stood the test of time. So I always like to begin this on the 1 month frame. What I use is this rectangle tool right here. So I start to just map it out. For instance, one area that stands out to me to start off is right down here. That's one area where I can significantly see price has been bought on the lower side, right? And up top of that, if I just look right up, this is the next area on the chart that really stands out to me. Those are the first 2 areas. And I just drew those on the 1 month. For those of you who have a little bit more experience, you might understand this. You can also color coordinate your time frames. Let's say we make this one, I'll make it a little bit more yellow so it stands out. These are the ones that I drew on the 1 month time frame. I can color coordinate these areas based on the time frame that I drew them on. So I drew those 2 areas on the 1 month, and as you can see, we're looking back here at where my mouse is 1996, 1998. That's when I was born, right? So these charts go as far back to, for some of us, well, these charts can even go back farther. I think we could find a farther chart that goes back to the 80s. There's different charts you can pull up here. Some of them go back farther to the 70s, some to the 90s. So this area has been significant over time, right? You can see the reaction prices had there. So this isn't going to be anything for the near future, but maybe near future. If price were to ever head down to this zone, what could be anticipated, right? If price were to head up to this zone, what could be anticipated? That's the idea of support resistance, right? It's also understanding that those could be where price is heading to. Those are areas that price at some point would want to head to. It would be driven to head to one of those, either the higher side so it can be sold or the lower side so it can be bought. So we do the same procedure. We can keep looking. And if you look again at this chart, there's an area right about here. Even if I go all the way back to here, for instance, that's been a significant level for price behavior. The way prices behaved around that level has been significant for buyers. That's easy to see. You can see around that area. You can see around this area, since again, we're looking for the ones first that stand the test of time, 2004, 2006. You can see the dates at the bottom. We can see how price reacted here, went through it, ended up coming right back and doing the same thing multiple times here. So now it's like, now we're kind of closed in. We could say, look, what would happen if price were to come here? Right? We could possibly see the same reaction. Or if it goes through there, where's it going to go? The next one, down here. So now we're just giving ourselves more information as to where the value of price could be going. So again, next one I see one more on this time frame that is significant, because we don't need a lot. We don't need 10, 20 different areas on the chart. We're just looking for the main ones right now. So right about here at the top, if I zoom in on this chart a little bit, you can see right around here what price was doing for a bit of time. To start it off, you can look and notice how I'm looking to the left. Like price is over here, but I'm using the left side of the chart to help provide me with some information. So when I look over to the left, I can see there was a significance to how price reacted here, broke through here, and even how it kind of fell here. And then if I drag that zone all the way over, you can see how it's been reacting even recently. So there's another zone that I just drew out. So this is kind of like, now I've been like trapping price. Notice what I'm doing. I'm trapping price now, making things a little bit more clear. I'm helping myself with a roadmap and understanding of key levels, right? It's easy to say now price could come up to here and we could look to expect something there, or it could come back down to here. We could look to expect something there. We're really now just playing between these two levels for supply and demand, right? This could be the next kind of gap that we fill, or this could be it. So I'm going to break it down. Notice I've only just done one time frame. My chart's not messy. I keep my zones as narrow as I can, right? Notice they're pretty narrow. They're not like this. They're not big zones drawn out on the chart, mapped out like this. They're quite narrow. I like to keep it neat, narrow, organized, and easy so that someone at a basic level could understand what I'm trying to say here. And that's what you do in trading, is sometimes keeping things just plain and simple is the best way to approach. So now we're going to break it down from the monthly to the weekly frame and see if we can find any support and resistance zones we couldn't see on the monthly. That's all we're going to do. So it's going to open up the chart a little bit more here. So now I'm just going to look at the same thing, or I'm going to just keep looking at the ones that I already drew. Right? You can see everything I drew on that monthly time frame is there. So I have my top resistance up here. I have my strong support zone down here that you can see prices touched many times. And I have my other resistance right here. And then down here, of course, down at the bottom is that support zone we drew. So let's keep looking. Let me undo all these red circles. So I don't have to use the left side anymore. I'm going to be focused more on here now. So right away, I can see about 2, maybe 3 more that I could draw. I don't really need to actually draw much more. Those ones that I have are quite well, you could say, if I were to use one word, well enough. One second, let me just get this thing off. There we go. So if I zoom in just a little bit more, so the next one I see is right about here. I'm looking for rejection, right? What I'm looking for is rejection or areas that price respects. And right about down here at the bottom. You can even see how price was bought in here. And as it came back, it was relatively close, but right here in the bottom and even right here, you can see how price has been trapped in there for several weeks. It went down, came up, went back up to here. We came right back down to the bottom, right back up to the top, right back down to the bottom, back up to the top, back down to the bottom, back up to the top. So we're playing in between these two levels now. Now it's more like, okay, are we going to break out of this level and go up? Are we going to break out of this level and go down? If we're looking for direction, that's how we would try to look at this. We would try to figure out which next level does it really want to go to, right? Because it's not going to do this forever. It's not going to go up, down, up, down, up, down, up, down, up, down. It's not going to do that forever. Soon enough, one direction is going to take over, essentially. That's called breakout methods. So let me go to a daily time frame, because right now I'm on a 1 week, so every candle is 1 week. Let me go to a daily. And as I go to a daily, we're going to look inside of here more. We're going to see if there's any more we can see. So again, now that I'm on a daily, you can see it a little bit more clear. You can see how price has been reacting in this zone a little bit more clear, on the clearer side, to say the least. Right? It's a little bit more eye-opening. So this is the levels that price is playing in between, right? For weeks. So we started to go down here, then we went down, then we went up, we came back down into that area. Notice how price has been reacting. This is called supply and demand. This is one part of supply and demand. I could take this a lot further than I am, but for the recording purposes and just for this lesson, I want to keep it basic. This is basic support and resistance, guys. This is basic support and resistance. This is something, as a trader, you're always going to have with you when you analyze your charts. It's always going to be a part of it. It's going to be a little bit of that ingredient. And I think it's very basic, but still very powerful. Just because something like this is very basic doesn't mean it's not very powerful at the same time. There goes GA into profit. Anybody who's been on my webinars, you already know. Back to Take Profit 1. So let's talk about one more concept inside of this. All right, we're going to talk about one more thing. 1 second. Let me save this image. Okay. Even if you look at this chart, for instance, guys, like here's just a smaller view of it. Let's look at this chart. This is one thing we've been trading. We took a sell up here once, but check this out. Even all up here, right? Those are trading opportunities. You just have to be able to recognize them. Even if you look what the market was doing all kind of in here, right, for a little bit of time, and then it broke through. You can see how there's areas where it was being bought in, and there's areas where it was being sold. Bought in, bought in, bought in, bought in, and bought in here and here. And of course, it's clear to see there's areas where it's sold, sold, sold again, sold again, sold again, and sold again, right? Notice, and this is what I mean by the market has memory. Same person who sold here, 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 and here. Look at what happened over down here, right? Notice that. Look what the market did here for a little bit of time. Rejection, rejection, rejection. Now the market's all the way down here, and it's going to go all the way down here. So that's what we're looking at. Even if you look at what the market's doing here, it got bought in here, it got bought in here, it got bought in here. Who knows, it might get bought in right now. I'm in a sell on this, but I don't think it's gonna, I hope it doesn't get bought in there. Let me see, I'm gonna think we're in a sell on this. Good. So let's talk about one more thing, all-time highs and all-time lows. I want to talk about this because this applies in support and resistance. Last thing we're going to talk about, and then I'll answer questions. All-time highs, all-time lows in the market. So an all-time high is the highest point on the chart that price has been. All-time low would be the lowest. And when we think of all-time highs, we're trying to think of, again, the highest point price has been all-time. So here, for instance, where I'm circling, based on this chart, because you can see how this chart only goes back to 2002, so this is my all-time view of it. Right now I'm looking at the all-time scale of this chart. I can see as far back to 2002 on this chart. So the highest point it's been in since then was up here. Lowest point it's been was down here. And then that was actually created even here, here. So whenever you're looking at a chart, it's good to recognize where you are all time. That's why I started on the monthly for that AUD Japan. I think that was AUD Japan we were just on. One sec, I think we were just on the AUD Japan chart. If I'm not mistaken. So that's why for that example that I did on AUD Japan, yes, it was this chart, I started on the monthly. It was so I could see where we were on an all-time scale. Are we near the all-time highs or are we near the all-time lows? Because most likely if this came up to here, most likely it would be sold. That's the highest it's ever been. I think there'd be too much fear, too much psychology around here to buy. And same thing goes to here. The psychology down here would be valued as very low and cheap. So I'd be inclined for buys. I think it'd be more fearful to sell here, right? So when we look at all-time highs, all-time lows, it's always good to consider where we are on the chart with that. Are we near the all-time highs or the all-time lows? So like this chart, for example, let's just say it's here now, but what if it was more near here? Then we'd be more inclined to be looking for buys because we know buyers would want to enter the market. But I'm not talking about like people like me and you. I'm talking about the big banks, the hedge funds, the guys with millions and billions of dollars running through the market.